You open Zillow at 11:47 p.m. just to look around. Nothing serious. Just curiosity. And somehow, every house that doesn't look like it survived 3 natural disasters costs $500,000. The kitchen hasn't been updated since 2007. The carpet has seen things. The backyard is barely large enough for a folding chair and a disappointed conversation. And yet somehow, the listing says, perfect starter home, only $500,000. Starter. As if the average person just casually wakes up one day with enough money to finance what basically amounts to a lifetime subscription to stress. And maybe lately you've been wondering something quietly uncomfortable. Maybe you make decent money. Maybe you even make what people call good money. But every time you run the numbers, something feels wrong. Like either you're financially failing, or the housing market has completely lost its mind. Because everyone around you keeps acting like this is normal. Mortgage brokers say you're approved. Friends tell you to just get in the market. Real estate agents say prices always go up. And somewhere in the middle of all that noise, you start wondering if buying a house is actually smart. Or if everyone is just participating in the same expensive group hallucination. So let's do something people weirdly avoid doing when emotions get involved. Let's do the math. Because the truth about who can actually afford a $500,000 house in 2026 is much harsher than most people want to admit. Let's start with the number nobody likes talking about. The income. Because people love saying things like, if you budget better, you can make it work. Cool. Let's test that theory. A $500,000 house sounds expensive until you realize the house itself isn't actually the expensive part. The monthly payment is. Say you somehow scrape together a 10% down payment. That's $50,000 cash, which already removes a huge chunk of people from the conversation. Now you're financing around $450,000. At today's mortgage rates, somewhere between 6% and 7%, your payment lands around $2,800 a month. And that's before reality shows up. Because houses come with hidden subscriptions nobody talks about. Property taxes. Home insurance. Maintenance. Repairs. PMI because you didn't put 20% down. Suddenly that $2,800 payment quietly turns into something closer to $4,200 to $4,500 every month. Every single month. Now here's where things get uncomfortable. Financial experts generally say housing should stay around 30% of your income if you want any chance of having a normal life. Meaning if your housing costs are pushing $4,400 monthly. You realistically need a household income somewhere around $150,000 to $180,000 a year to avoid becoming what people politely call house poor. And that phrase sounds harmless until you experience what it actually feels like. Because house poor doesn't feel rich. It feels trapped. Here's what being house poor actually looks like. It's not dramatic. That's what makes it dangerous. You buy the house. The photos look amazing. You get the keys. Everyone congratulates you. For about 3 weeks, it feels like you made it. Then real life starts sending invoices. The water heater dies. The property tax bill shows up. Your car suddenly needs repairs. And now every financial decision quietly turns into one question. Can we still afford the mortgage? Dinner out? Maybe next month. Vacation? Probably not. Emergency savings? Gone. You stop spending money because you're responsible. You stop spending money because you're scared. And the strange part? From the outside, people think you're doing well. You own a $500,000 house. Meanwhile, inside, you're checking your bank account before buying groceries. That's the part nobody posts online. Because technically qualifying for a house and comfortably affording a house are two completely different conversations. And in 2026, that gap is becoming brutal. So who can actually afford a $500,000 house? Not the average person. Not even most good income households. Realistically? People making well into six figures, dual income professionals, people with family help, or people willing to accept an amount of financial stress that quietly controls the next decade of their life. And that's the math nobody wants to say out loud.